G'day guys, it's Khalid from Only Estate Agents and welcome back to today's video. I just wanted to talk quickly to you guys about the financial landscape, interest rate cuts, changes in the financial lending criteria, and what's happening to the marketplace in real estate terms. So what happened on Tuesday, the Reserve Bank of Australia met up again in their meeting and decided that they reduced the rates cuts or the cash rate by 0.25%. What does that mean for you as a home buyer or seller? Basically what it means is there's going to be a lot more activity in the marketplace where money is becoming cheaper to lend. Essentially not all the banks have passed it on, but that's where you've got the luxury and the opportunity to shop around with your existing mortgages that you've already got and with the new mortgage that you're about to go and get. There is a lot of opportunities out there with banks. Some of the big banks have passed on the full rate cut, so it's definitely worth looking into that. But obviously your circumstances would obviously limit you or give you the opportunity to expand on being able to choose other lenders. Every lender has their own selection and search criteria. The Reserve Bank made a clear mention in the media that this was a chance for all the banks to do the right thing by their customers post Royal Commission. And essentially some banks have just decided, well, we're going to pass some of the rate cuts on, which is still a good thing. But people like NAB and CBA have passed on the full 0.25. So essentially what this basically is going to do in its natural course, next 3 to 5 months, is have more activity of buyers in the marketplace. So if you're looking at going onto the market, now's a good time to really think about preparing your home, getting your appraisals, assessing your financial ability to purchase, but bearing in mind that once the market is on an incline, when you sell here and you purchase there, that's where the change in the marketplace would actually cost you money. So it's not necessarily the best time to always say, okay, we'll wait for the market to go at its highest because you'll have to buy in the same climate. So definitely assess where your financial benefit or gain is, whether it's right now going onto the marketplace or waiting on because you've already purchased in a fantastic market that we had just recently, and which was quite flatlined. So what I'm trying to say at the moment is, for buyers especially, if you're wanting to get into the marketplace, now's the time to really get in there before the full flow-on effect of the change in the cash rate and the interest rates from the banks handed down take into full effect and affect the climate out in the marketplace. The great open homes are coming up this weekend, especially with our company, and there's some great opportunities still to be had out there. And it's definitely a big advantage for people that have already got their mortgages to see those rate cuts come into effect. The lending criteria are probably, for lack of a better term, are softening. They're looking at not taking into consideration credit card debt as for the ability to lend against a property or for the assessment of a mortgage. So that's a great thing for people that are wanting to go and get a mortgage and are finding it tough a little bit. They've had the credit card there because they've obviously used it for their day-to-day transactions and it's worked against them instead of for them. A lot of the times people like to set up their life with using a credit card and getting their wages going in there, grabbing the points and things like that. So now it's not going to work in an advantage in some of the banks that they've already announced. My best suggestion is always to speak to a professional to get your financial advice and information. This video is essentially to give you some insight about how this market will be affected, and we are going to see the effect. The Reserve Bank has mentioned, and it's probably not something to take on as gospel, that they're going to be another 0.25 rate cut. There may not be, so don't sit there and wait for that. If you're thinking that the market's going to change, and even for the more positive with another rate cut coming down, I always tell my clients, friends and family that always work with the climate that you've got now because you can never tell what's in the future. Thanks guys for watching. Hope that helps. Any questions you got, please drop me a line on my Facebook page, or alternatively give me a call on the mobile or the landline. Anything you wishes, we can give you an answer and help you out with anything you need. Thanks guys. Hope you're having a great night. Thanks for watching. Tease.